So tell us about Twilio. That's the IPO everyone's watching. What is it and why are we all supposed to watch it?
Well, Twilio is a unicorn, so it's a startup that's valued at more than $1 billion. And we're in the middle of one of the longest IPO droughts in tech ever. So there have been a total of two US-based tech IPOs in 2016. Twilio will be number 3. And that means everyone's looking at it. If there's a very crowded IPO crop, if you will, no one IPO can really set the pace. But when there are so few, the pressure is larger for each one. So Twilio's offering really could set the tone for the second half of this year. If it has a very rough debut, the IPO window could close. If it does very well, the IPO window could be open. Everyone wants more liquidity, so Twilio has a lot of weight on its shoulders, not just from its own investors, but from really all investors.
So what do? Will they deliver snacks to my house in an hour?
No, they provide APIs. I think we have enough things that already do that.
Okay.
By the way, shout out to Spoon Rocket for dying.
Oh.
I miss you. Yeah, it's sad times. No, but Sprig, Munchery, Uber Eats, they all got you covered. Twilio provides APIs for developers to use telecom stuff. So if you use WhatsApp and get SMS notifications, that's Twilio's backend pipes. So they're kind of a business-facing, non-sexy, big company, quickly growing revenue, declining losses, a lot of cash, and they're relatively conservatively priced, which is the other thing. So if you look at their valuation at kind of midpoint of their proposed IPO range, they're worth about $1.07 billion. And their last private round was 1.04, a valuation at $1.04 billion. So right now we're seeing them kind of price a bit low, conservatively, and we'll see how the market responds to that. I'm pretty excited.
So I don't want to tell people how to invest because that's not my job. So don't trust me on this. But I do think that if it's something like if someone can explain, as you just did, and still the average person can't really understand it, then I think that's a good investment at this point. Don't you think?
I do not give investment advice. It's just a non-sorted out federal person license thing. But I will say that we have seen companies price conservatively in the past, like Box, and seen strong first-day offerings. Because you have to keep in mind that to price an IPO is almost as much magic as it is science, or art, if you want to call it that. And so people will price a little bit below to get a first-day pop. That way all the media sources say the IPO was a success, big first day. So what we'll be curious to see is after the roadshow, when the final price is set for Twilio, is if it's actually north or outside of its current range. That'll be a very positive and bullish sign. Pricing in range is also just fine. So this Thursday, we'll see bright and early in the morning what's going to happen. And I don't know, but I'm pretty sure it's going to set the tone for a lot of boardroom calls for startups around Silicon Valley.
So there was another big announcement today from Twitter. They bought a magic pony.
Oh, God. Yes, literally, it's called Magic Pony Technologies.
Will they deliver snacks to my house in an hour?
Yes, but they will only deliver Magic Pony jerky, which is rainbow flavored, tastes terrible. So I couldn't quite recommend it.
Yeah, you don't want that.
What is Magic Pony for real?
Well, that's a great question. So I was prepping for this and tried to figure out the answer to that because I knew it was coming. Something to do with machine learning, image recognition, possibly AR and possibly VR, with a staff of 11, including both founders, and one round that was undisclosed in quantity. So it's a startup that raised some money, has some people, and does some things.
Yeah, from what I was reading into it, looking in like you were saying, there's not a whole lot of information about Magic Pony, which, by the way, can I just point out this segment is dedicated to unicorns and magic ponies. I never thought I'd see the day. But from what I could tell, part of what they can do is they can create or basically create composites of an image based on other images in a series of, in a set of images that look similar. So if you've got an image, and this might just be one example of what their software, their service can do, but if you got an image and it's missing a little bit of extra data, it takes the other images that you've taken in that same scene and constructs it together. How that fits into Twitter, I have no idea. But there you go.
Well, it could be one of those times in which Twitter has an eye for the product or just an eye for the team. I mean, Twitter certainly wants to work with machine learning to build out moments, to group things by topic and so forth. And certainly images could be a way to bring together a large quantity of tweets down to just kind of the important few. But I'm not entirely convinced that the actual core product they were working on will be what comes out.
Right.
Because Twitter, like other large companies today, has a history of buying small startups for the talent. And Twitter's depressed share price could, force it to hire in more non-traditional ways like acqui-hires, like the case could be. But at $150 million all in, it's not a small price to pay for that kind of talent.
All right, that was going to be my next question. Like we didn't know how much we don't know that number for sure, do we? Or is that just estimated?
Well, Ingrid London of TechCrunch reported it, and I don't tend to bet against her. So I would say it's pretty darn solid, to use twit-friendly words. See, that's progress right there. I would say she's definitely, if not on the nose, in a darn close range. So in the $150 million range, but that includes retention bonuses for employees that stay. So the actual initial purchase price will be lower than $150 million. And I don't think we're sure if it's cash or a mix of cash and stock.
Yeah, I think what's also interesting here is that this is not Twitter's only kind of AI move. In 2015, they acquired Wet Lab. That's AI technology for training new AI systems and doing it quickly. They acquired MadBits in 2014, which is like image search, a dynamic organization of large databases of images. So some of these kind of play together, but it really seems like they're creating a team, a pretty nice, solid kind of catalog of AR, VR, AI experts, lots of other acronyms. But we aren't totally seeing a lot of the fruits of those hires yet. Do you think there's pressure, or there will be pressure on Twitter to kind of reveal this at some point soon?
Well, there's massive product pressure on Twitter to drive user growth. That's kind of their core mistake right now. From a financial perspective, Twitter's doing fantastic. It's grown very, very quickly. It has $3.6 billion in cash, or dead before this deal. But what it hasn't been able to show investors is consistent month-over-month user growth. And so if all these investments don't lead to either better retention of current users or the accretion of new monthly actives, it doesn't matter. They won't solve Twitter's core issue. So I don't see the conduit from magic pointing technologies to my mom joining Twitter, but that's why I'm not a visionary CEO and I'm but a humble reporter. But if someone does know the answer to that question, I believe we all have email addresses that we check. So please let us know what that'll look like.
Yes.
So we've heard a lot of purchases lately, Microsoft and LinkedIn, just like a lot of little purchases, and Pinterest, they just bought some sort of AI team. Is this the new normal?
Well, actually, Mark Andreessen made a comment last week that he sees more M&A in the pipeline right now than he has in the last 4 years. And I saw some reports out this morning that actually tech M&A is quite strong so far this year, even as venture capital, as we reported this morning, is kind of in a bit of decline in Q2. Back to the IPO point, given that we're not seeing any kind of top-end liquidity into the public markets, either we see private liquidity or none at all. That's the only other option. So I think we could see a more active second half of this year than the first half, but I haven't heard rumblings of any large mega deals aside from the LinkedIn one, which everyone missed entirely. So I would say small to medium-sized deals, quite a few as we consolidate into this cyclical downturn, but on the whole, I wouldn't call it a radical shift.